Tom, thank you so much for joining me today. We are very excited to hear about what's going on with Monzo. You just hit the, is it 100,000 users?
That's right, just last week.
Which is very exciting. Nearly the 1 million mark of money going through Monzo as well. Is that
we hit 100 million.
Sorry, 100 million. Yeah, tell us, that's a great start to the year.
Yeah, it's been brilliant.
What's the plan for the rest of the year? What's going on with you guys?
So, just stepping back a second, I remember when we planned this prepaid thing, we were trying to do it to test out the product with a handful of users, and we thought we'd maybe get 4,000 or 5,000 cardholders at most. So we're just delighted to get to 100,000. It's absolutely brilliant. The next step for us is obviously the bank.
Yep.
So we got our license in the summer of last year, and we're just finalising getting that fully launched, if you will. So the last few, sort of dotting the I's and crossing the T's. We'll be launching the current account in the next few months. So we're testing it internally with a handful of staff at the moment.
Okay.
Coming soon.
And what's the feedback so far been from internally? Obviously, everyone's kind of.
Oh, it's early. It's early. So just as with the prepaid card, we iterated very quickly, and so the first few sort of weeks and months there were clearly teething problems. But I think what a real strength of Monzo's is the ability to iterate just really, really quickly. So, the first month or two with the prepaid card, a bunch of bugs. But by about sort of February or March of last year, it was working really well. And we really knew the difference was palpable, because people stopped saying, hey, why is my card not working? And started saying, can I have a second card or a third card for my husband, my wife, or my friends? So we're going through that with the current account right now, just making sure that we don't just do direct debits and standing orders the same way everyone else does them, but do it in the sort of Monzo way, so a way that's delightful and gives you visibility and control over all of your money.
Absolutely. So if I was, like me, the average Joe, with a Monzo card, obviously keeping up with what's going on and going, oh, yes, can't wait for this current account to happen, when would I be able to expect it?
So we'll do, as before, a staged rollout. So we tend not to do big bang launches because they go bang and stuff doesn't work as you'd expect. And so we've been much more successful with kind of staged rollouts. So we're trialing a handful of accounts internally right now. That'll go to sort of a few thousand early users, hopefully in the next couple of months, and then the massive users over probably 3, 4, 5 months out. So by this summer, we should have been fully transitioned onto the current account. New users will be able to sign up straight into the current account by the summertime. But it'll be a phased process.
And will you still offer the kind of prepaid card as well at the same time as offering the current account, or will you kind of shift towards just the current account?
That's a good question. We will shift just towards a current account, but we would like to make it as easy to sign up for a current account as it was for a prepaid card. So I don't think consumers really should have to care whether it's a prepaid card or a debit card or credit card or whatever. These are sort of words that banks invented. It's an app, you can get started really fast, you can put some money on it, you can spend that money. Does it really matter if it's a prepaid card or a current account? Arguably not. So that's a kind of experience we're trying to get to.
Absolutely, yeah. People don't really care about these things, do they? Kind of
No, bankers have just trained us to think about these things. And they're not real things, they're made up.
You're not going to rebrand the current account as something, I don't know.
I kind of want to do that, actually. No, I do, because I don't know, this is probably, I think what we're trying to do is something different. We're not just trying to do a current account that does all the same things as the bank, but a bit cheaper, right? I think we're trying to solve a broader category of problems, or eventually at least. So it should be the current account that tells you when you've got to tap out on TfL, or accumulates your Nectar points automatically, or switches your gas and electricity automatically to save you money. And that to me doesn't feel like a current account from HSBC or RBS. It's almost like the shift from the old Nokia feature phones to the smartphone. And I think we need a new phrase. I think smart bank is I don't know, kind of a bit lame, but if someone has a better idea.
You should do some sort of competition.
Yeah, name the thing. I don't know what the thing is yet, but if we get it right, it will feel like a different kind of service, I think.
And in terms of funding from VCs or elsewhere, kind of not individuals, how are you finding that at the moment? There was a report saying that fintech funding had gone down, but also the challenger banks were one of the biggest kind of funded last year. So it's a bit of an interesting time to be doing it, particularly with Brexit.
It is, yeah. So we're just wrapping up our fundraising now, and signed term sheets, and we'll be announcing that at the same time as crowdfunding. It has been different, and I think the investment climate around the world has changed in the last 12 months compared to 2 years ago. I think there's a real focus on, this sounds strange, but like business fundamentals, whereas I think there was a bit of exuberance probably 2 or 3 years ago with Uber kind of used basically infinite cheap capital as a weapon, and everyone sort of looked at that and went, oh, that must be the way the world works now. Let's assume that capital is endless and cheap. Yeah, yeah, and just keep growing. And that there's been a backpedaling from that, I think. So I think investors are really focusing down on the business model and unit economics, and so a bunch of startups have had to shift from a growth model to a how are we going to make money model. That said, there is a ton of money going to challenger banks. I think we are probably the least capital intensive of the new challengers. Others have a much more of a balance sheet driven model. They need to, you saw Atom's raising another 100 million on top of the 100 odd it's already raised. Mortgage lending is a capital intensive business. That's not our model. So we are much, much lighter. We're more about the sort of transaction processing, user identity and transaction data. That's kind of core to our model.
Yes, because you said that I think at the time you got your banking license that you were solely focused on the current account. It wasn't going to be a range of products. Is that still the kind of plan, or would you consider potentially savings? Because obviously that's a sensible next step after what we call a current account.
So this goes back to the kind of solving a broader range of problems point, I guess. So we're not aiming to build a full service bank. So we're not going to offer Monzo mortgages or Monzo credit cards, for example, but clearly, as individuals, we have a range of financial needs. And so what we're trying to do with Monzo is be the financial hub. So you want to send money abroad, use TransferWise, like still integrated into the Monzo app, but use these third parties via kind of APIs in a seamless way, but not on our balance sheet. So thinking longer term, you've been paying rent for 3 or 4 years and saving up, we can help you take your transaction data and your verified identity to go and get a mortgage. And maybe it's HSBC, or maybe it's Charter Court, a new bank that provides you the best mortgage. So it's kind of this marketplace idea. So yes, in time you should be able to access every kind of product from within the Monzo app, but not necessarily from the Monzo balance sheet. So much more of a kind of marketplace or a portal.
Excellent. That kind of feeds into my next question, which obviously a lot more these days is, fintech startups as rather than being disruptors to banks, are being partners to banks. So for you guys, how do you see that relationship working? Is that something you would look at?
Yes, and it depends which banks. So I think the sort of retail finance ecosystem is really interesting. Someone said, I'm going to get the quote totally wrong, but every industry is either going through a wave of disaggregation or reaggregation. And what we've seen in the last 10 years is disaggregation, clearly. Funding Circle and Zopa and TransferWise and all of these single-purpose providers doing one thing really, really well. I think we're going to go through reaggregation, albeit a looser reaggregation around kind of APIs and marketplaces. So in that sense, we will be kind of partnering or cooperating with a bunch of banks offering these products. Similarly with PSD2 coming along, it's kind of requires each bank to open up APIs, and you almost force each product to stand on its own 2 feet, which we can then reintegrate around an API as sort of becoming a platform, if you will. So that like disaggregation and then reaggregation around APIs is sort of the way we see ourselves partnering. And as a financial services provider, I think you have a kind of a strategic question. And I think a lot of big banks are kind of fudging this question, where you decide you're going to be a hyper-efficient balance sheet lender. You don't really focus on brand or customer relationship that much. You just like super efficient at writing mortgages. And Atom is sort of there, but definitely Paragon, Oak North, Charter, Marshaven, all of these banks that have launched in the last year that no one's ever heard of, because they just don't spend money on brand marketing. they spend money giving you the best rates on your savings accounts and the cheapest mortgages. And so if you look at the top of the best buy tables, it's always these banks you've never heard of. Mm-hmm. And that's great, actually. It's really good for the customer to have that competition, that choice. So on one hand, you either be a super, super efficient kind of balance sheet savings and loan company, or the other end of the spectrum is you be a customer interface, a trusted brand, really double down on design and user experience and giving one-click kind of interfaces. And those two partner really, really well. Mm-hmm. The problem is, for most big banks, they're stuck somewhere in the middle. They don't do either. They're not efficient enough to compete on price, and their user interface is sucky, so no one goes to choose to use them. So they're kind of caught in the middle of this strategic kind of bifurcation, I guess.
Do you think, and what do you think we'll see then from the banks, kind of, short term or long term? Like, will they kind of go one way or the other, do you think?
I think they'll do
different
both.
ones will do
So
different things.
I think they'll need to make each product stand on its own 2 feet. So they'll have to dramatically cut operating costs, get rid of branches, automate, like invest in technology to make the servicing of the product much, much, much more efficient than it is today, so that they can compete on price in a much more transparent marketplace. I think they're also, doubling down on building better user interfaces. The problem is they have to build the best marketplace. You can't just sell your own wares. You have to sell other people's wares to be competitive, and that's the strategic problem banks are going through. They're like, great, I've got this customer interface, but I only want to sell my mortgage. I don't want to offer someone else's mortgage. Why would I do that? And as a customer, you're thinking, like, why would I want to get locked in with an RBS or an HSBC when I can use something like a Monzo or whatever, some other interface that gives me choice and price competitiveness?
You mentioned there PSD2, open banking, APIs, kind of jargony for some people that may not quite understand it, but it's big, and how fundamental is it to you guys, and do you think for the fintech industry more broadly? Is it a kind of a big bang moment where it suddenly opened up?
I think the potential of PSD2 is enormous. So the sort of, in a nutshell, PSD2 is this piece of European regulation which means that any payment account provider, i.e. a bank account, or a bank has to open up the data inside it so that a customer can take that data and share it with third parties with opt-in permission. So you could go to Money Supermarket and say, scan my account where I could be saving money, or you could have a single dashboard that shows all of your, your pensions pot and your mortgage and your ISAs all in one place, which is amazing for the consumer, and it has the potential to revolutionise retail financial services, but the reality is going to be a bit of a train wreck, I think. The next year or 2 or 3 will be incredibly rocky. I just don't think anyone is ready really to launch these things yet. I think the banks will really struggle to get them working. I think they will be clunky and slow and very difficult to use and not give the kinds of data you'd want in the ways you'd expect. And it will take 5 years to get them right. But in 5 years, it might be really cool. So we're kind of, if it happens miraculously to work, we'll absolutely jump on that bandwagon, but we're not betting the farm on it. It's just not, I don't think it's going to be ready yet.
Absolutely. And with the banks, I mean, do you think it, you kind of covered it there a little bit, but do you get the sense that they're potentially a little bit reluctant to do this because for them it's obviously a big change?
I've heard one board member of a big bank say that they'd open up APIs over their dead body. This was a few years ago, but it's like they see this as their, like, the customer transaction data is like theirs, and they don't want to let anyone else get hold of it. And then we're forced to by law now. They're saying, and frankly, they're not making very much use of it, really. They're sitting on it in silos, but even within the bank, the sort of data in the product, the mortgage product isn't shared with the credit card product. It's really, really siloed. And so cracking it open will create value for customers, but I think banks are very scared about losing the customer relationship. I think they have this concept of owning the customer, which just seems just horrific, actually. I think you should be serving the customer, and if you do that loyally and fairly, then maybe the customer will grace you with their customer, with their business. You don't own the customer.
So with challenger banks, I mean, obviously they've come along and they are challenging the big banks, the established banks. There are several of you.
Yeah.
There are, it kind of seemed like they all came along at once. Everyone's in kind of different stages, but they're all still quite early. How do you see competition kind of going forward with them? And do you see more challenger banks joining that? Or is it potentially a little bit too late for others to join?
No, I think it's definitely not too late. And there are probably 15 or 16 challenger banks. And people always talk about the four that are kind of, if we think about that spectrum before, the people who are doing the kind of big brand, like customer interface stuff versus the very lightly branded, really efficient balance sheet, people talk about the four with the brand, naturally, right? We do a ton of marketing. But the real hidden success story is the 10 or 12 or so that, the Paragons and Mars Havens and Oak Norths that have successfully launched and actually raised pretty big balance sheets already. They're just sort of quietly plugging away and doing what they do really well. I think the four who are making a lot of noise, that'll be really interesting. And I think we've had a very different approach, which is to be super transparent, to launch product early and to get users involved. And that's worked incredibly well for us. So it's almost like, and some of the others haven't, right?
Are you talking about yourself within those four?
Yes, for sure. Okay. So Starling, Atom, Tandem and Monzo would be the four in the UK with the sort of going after broadly the same market, but maybe not, right? You can argue about that. But certainly talking about things like artificial intelligence banking and really kind of the customer interface. And it's been like a kind of a game of poker so far, with two or three parties holding their cards quite close to their chest. We've played with an open hand. We've just put our cards on the table and gone, that's our hand, that's what we're doing, guys. And the others have sort of been playing a very closed hand. And I think 2017 will be the time when you've got to lay your cards on the table, and we'll find out who's been bluffing. So we'll see. It's like there's been a lot of talk, but not a lot of product from some of these players. So I think 2017 is the time when we'll actually see what everyone's been building. I think it'll be hugely exciting for the customer.
Yeah. So by the end of 2017, where do you see that landscape? Who's going to have done what, and how do you see that panning out between them?
Impossible to say. I just haven't seen the products that a few of these banks have been building. They've just played their cards very close to their chests, and we'll see. They might have pocket aces, or they might have a busted flush. We'll see. We'll see. I think our approach has always just been super, super open, transparent, iterative, and it's worked just incredibly well for us. So we are growing like crazy. We hit 100,000 customers. We're growing 8 or 9% week on week in the last last week in particular, with basically zero marketing spend. And so that word of mouth kind of thing is starting to work really well. Long may it continue.
That's a good point. The word of mouth obviously has worked really well. Do you see that hitting a ceiling at all, and that you may have to kind of broaden that, so to try and get those customers that will probably be open to it, but wouldn't necessarily be in that world of knowing someone who's an early adopter?
That's an interesting question. I think we've moved. I don't know if we've moved yet between sort of the early adopter and early mainstream or not. Certainly, the demographic of our customer base has changed dramatically. So the first 5 or 10,000 were male, 31, lived in Shoreditch, had an iPhone, a silly beard, and worked in technology. They're me, basically. They read TechCrunch. It was really surprising how narrow the demographic of the first 5,000-ish, 10,000-ish users were. 92, 93% were male of our early users. More recently, as we hit sort of 70, 80, 100,000 customers, it's much more evenly gender balanced. It's 60% outside London. iOS and Android are more evenly split. So I think, arguably we have got into that early mainstream. And so this word of mouth thing is something we are doubling down on and really trying to build network effect into the product. So you'll see, share your contact list so you can see who else is on Monzo. You can send the money, you can request money from them, you can split bills, you can have joint savings pots, all these kind of things that make the user want to bring their friends because it makes the product better for them, if that makes sense. So the first bank with real network effect, perhaps. Adding a bit of that social network kind of in there. For sure. It's the way all the social networks grew exponentially for free. How Skype grew. Skype gets more valuable the more people you know who are using it, you can call people. So that's not ever been true with a bank account, really. It's been a very private thing. Yeah. So actually, I think there are quite strong network effects if you build the product in that way.
It's interesting as well because conventional thinking, one might assume that, why would you want to do that thing, that sort of thing with your finances?
Yep.
And it's interesting that people do.
It is, and it's not everything, right? It's not like I'm sharing all my transaction history or my balance with the world. You're not like tweeting necessarily, although some people do. It's more like those interactions. It's this, I bought lunch for a colleague and he or she needs to pay me back, or like 8 of us are going on a ski trip or something, or we're, I'm in a house share and I need to split the gas bill 6 ways. So it's those kind of interactions that are kind of a bit painful now. And you've seen apps that do bits of them, so like Tilt or whatever, doing kind of bill splitting, but they become much more powerful if they're inside your bank account. So we really see we see one user then blossom into 10 users around that person. And we see that a lot, sort of pockets. So we introduced it to a bunch of tech companies. So we went to Stripe, we went to TransferWise and gave out a handful of cards, and you go back a month later, the whole of TransferWise is using the Monzo card. That's just happened over and over again, these kind of communities of people. It's a really encouraging sign for us.
You should definitely do some sort of visualization of that.
Yeah, it would be great.
And more broadly, unfortunately, it's one of those subjects that comes up a lot, Brexit. There's been varying responses from the fintech world to leaving Europe. For you guys, what kind of impact might that have, if any?
So there are 3 things, I think. So long term, who knows what the impact is? It may very well be hugely positive for the country. I can't tell. In 10 years' time, maybe we'll be super, super glad.
No one can, so no one can tell where it's going.
The 3 things that it hurts like today and for the next couple of years. One is investment. It has definitely slowed down appetite from especially Europe and the US. China bizarrely seems to see it as a good thing, actually. They see an independent Britain as perhaps stronger even and are more willing to invest. But like capital inflows, I think, have been damaged. Second is attracting and retaining the best talent. And sure, you can talk about making the visa process easier, but the reality is out of 81 staff, we've got something like 20 odd from continental Europe who came in without having to get a visa. 1 or 2, we've just started to do our first visas. It's like 10 times harder to get a visa than just have someone from the EU walk over the border, frankly, and join. And even more than that, it's like emotional. A bunch of our staff are European nationals and have sort of, the last 2, 3, 4 months have sort of felt like, I thought this place was my home. Can I really make a life here? I've got, maybe you're married, you've got young kids, like, is this the kind of environment that, am I going to be welcome here in 5 years' time? Should I be thinking about moving back home? So that's like much harder to quantify, but it's a real sort of feeling and a conversation I've had with many of our staff, which is, we're trying to reassure them, like, we hugely value you, and it's sort of like, but does the rest of the population really value us? So that's tricky. The third thing is passporting, and that's a hard subject. I think on balance, probably passporting will go away, and passporting is a bank's ability with a national license to operate across Europe. So we have this sort of equivalence procedure. I think automatic passporting will just go away for UK banks, sadly. I might be wrong on that. If it goes away, it's not fatal. We will have to go and get a second license in probably Ireland and open an office there and have some of our staff there. And it just seems bad for our economy that all of our fintechs and all our banks are going to have to move a bunch of their staff to another country. It just seems something that we could have avoided. But there we are.
And have you, kind of, with passporting, are you just at the stage of watching and waiting, or are you kind of looking more actively at what you can do
so
go elsewhere?
We will start. So passporting has not gone away yet, and actually I don't think it's going to go away for 2 or 3 years. I think this whole Brexit thing is going to take a long time. We'll still be having this debate in 3 years' time. So probably what we'll do is passport into a bunch of European countries just under the current regime. Nothing has changed yet. And then in time, as we see how the sands shift, I guess, we will open very likely we'll open a second office, but not for a year or 2.
What else do you think we're still early in the year, what do you think for the year ahead are going to be interesting trends to look out for from fintechs?
That's an interesting question. So, I think I've got a number of friends who started sort of property technology startups. So, Habito, my previous co-founder Matt has started Nested. So, these sites that basically help you either get a mortgage or sell your house, or sort of around that house buying process. So, I don't know if it's got a moniker yet. Prop tech. Oh god, yeah. Prop tech. There's also reg tech. So selling KYC, basically the provision of KYC services to the big banks, and money laundering and counter-terrorist funding, all that stuff. There's just a lot of money in it because the banks are employing thousands of people to do it right now, and software could do it much better. And then you've got the equally unlovely InsurTech. That was kind of 2016 on the hype cycle, I think. Insurance stuff. So there's like Cover that are doing quite well. Brolly that's pretty early. Just a bunch of different ways to kind of purchase and manage insurance for someone who lives on a smartphone, basically. Those are the things I see. I mean, clearly then you've got in Asia you've got WeChat and Ant Financial, which is just absolutely amazing. It's
insane.
It is insane. It's on a different level. Just the speed and scale of their growth is breathtaking. We are dabbling around at the edges in Europe at the moment.
You wouldn't think of going to China to take them on?
It's just so different. I'm a huge admirer of what's going on over there. I think there are massive differences to Western Europe and the US.
Would you be concerned about some of that coming over here? Because that would seem more likely.
I don't know. I think it is just very different, and we have a pretty penetration of financial services in the West is ultra high. Like everyone already has a bank account, and it's like they're kind of clunky and you get hit with fees, but everyone has a bank account already, basically. And the regulatory environment is relatively robust here. In China, you've got a new middle class, like getting access to, or demanding things like access to credit or investment products for the first time ever. And they've all got smartphones, and typically in the past we've never even had a bank account, and so it's like this huge tidal wave of tech-enabled consumers demanding stuff, and a regulatory environment that's very different to the West. And so those two things just enable hyper growth, basically. The factors in the West are just different. So yeah, I'm not sure it translates directly.
And what about Europe? Obviously, UK market is home market. Would you consider expanding further into Europe?
For sure, yeah. For sure. I think we would love to, but it's important not to underestimate the cultural differences in every country. So, the usage of cash in Germany is staggeringly high still, and actually the sort of they're hyper vigilant about in sort of data privacy in a way that even surpasses the UK. Other European countries, they have payment on delivery. So you order off a website and you pay the postman when he delivers it to you. It's like these cultural kind of norms are just very different. So I think we just need to be aware of that before kind of steamrolling in with like this is.
You can't just go, hey, Europe, we're here.
Yeah. I mean, I think N26 in Germany are doing a really good job, but even I think they're also finding this like cultural difference surprising actually from Germany into France and Spain and a bunch of countries. They're just very different.
Absolutely. Very last question. AI. Obviously, there's a lot of chatter around it. A lot of, it gets quite technical in the sense of, this is an algorithm doing this, but what's AI doing in this? But in financial services, there's a lot of talk about it. What's your views on that? And are you guys kind of looking at that at all?
Yeah, so the equivalent in 2016 was blockchain. And that was a big pile of junk, basically. It was massively overhyped. It was a solution in search of a problem. For me, machine learning and AI is the real deal, actually. Well, I need to nuance that a little bit. I think a lot of the advances right now are basically like a rules engine, like software that if this then that kind of software, like that is not AI. That's how computer code works. And like you're discovering that computers are really good at like running software to automate stuff. Like hurrah! But even beyond that, actually like sort of the various kind of machine learning disciplines are they are yielding surprising outcomes even today. So we're using it for fraud detection. Okay. And we published a blog post last week where we got hit with a bunch of fraud over last summer, and we were losing a substantial amount of money. We implemented a rules engine very quickly, and that got rid of 80% of our fraud. That's a simple rules engine that human codes, right? You set down a bunch of patterns that you look for. Mm-hmm. To get the last 20%, then we put machine learning in. We used Google's TensorFlow library, and that brought our fraud exposure. So we got the first 80% of the benefit from rules engine. The next 19.9% we got from a machine learning algorithm, wow. Basically. And our fraud is almost at zero now. Mm-hmm. So I think that's a really good illustration of how machine learning actually can have impact today. I think credit underwriting is another really, really ripe area for disruption from machine learning and sort of data. Mm-hmm. It'd be an exciting few years, I think.
It's an impressive result.
Thank you.
Thank you so much for joining me.
You're very welcome.